Blackie, the CEO of Business and Commercial Banking for Standard Bank Group, joins us for this episode of What's Next. The BCB conference, Africa Unlocked, Unlocking Africa's Growth, was recently held and exploring and promoting Africa's growth potential. It was the Standard Bank Business and Commercial Banking Conference. It was themed Africa Unlocked, and as I mentioned, Unlocking Africa's Growth, aiming to explore Africa's vast potential and the pivotal role that commercial banking plays in the development of this. Now, the conference, which featured thought-provoking sessions on various topics, including Africa's competitive advantage, energy solutions, trade, family businesses, and the post-election landscape in South Africa, of course, and attendees gained insights from esteemed international speakers. There were global thought leaders that attended. There were top commercial clients, African public and private sector leaders, as well as internal stakeholders attended the conference. So it was a fantastic conference. It was held last week. And Bill, this was the inaugural Business and Commercial Banking Africa Unlocked conference. So last week is when it took place. Welcome, firstly, and can you give us a brief update about what the conference aimed to achieve and if it was successful in doing so?
Excellent, Aki. Firstly, thank you. Thanks for having me on your show, and it's wonderful to speak to you and your viewers. To answer that question, we need to go back a step or two. And in the context of the group, the Standard Bank Group, its vision under our leader, Sim, is Africa's our home, we drive our growth. And in that context, of course, we're talking about South Africa and Africa collectively, the broader definition of Africa. In that, we were looking at what is the potential, what can we as a group do to really drive its growth? And there are many avenues of investment that we're making. But one of the areas we realized is if you look at the developed markets versus Africa today, one of the big gaps is the depth of small, medium, and family-owned businesses, the number of those businesses in the economy. And if you look at Europe, the US, even China, and India, the endowment that they have of these small, medium, and family-owned businesses, they are huge employers in the economy, huge providers of product, etc. What we believed was that actually as a bank, we need to start to develop the capability to service this segment of the market as a specialist segment. And that's what we've been doing over the last couple of years. A lot of what our work is over this last period has been really internal, focusing on staffing, capability building, credit systems and processes, technology systems, etc. And we felt we were at that point that we could engage more publicly with the market and most importantly, with actually the representatives of the segment of the market, the family-owned businesses, medium-sized businesses, etc. So that's what we do. We were bringing that together and having conversations that are critical to this segment of the market.
What were some of your key highlights and key takeouts from the conference, Bill?
So you covered many of the topics that we dealt with. And when you think of small business matters such as energy, we covered. We had the CEO of Eskom there, gave us a very comprehensive brief on where he's taking Eskom. We had some suppliers of renewable energy. Of course, these are all important parts of but the important part is energy is growth. And so in talking to small business, it's really important to give them a picture of what are the solutions for energy in sub-Saharan Africa. Likewise, we covered trade. There's a huge amount of work going to the African Continental Free Trade Agreement. And it was so important to be able to talk to practitioners about what do they need in trade? What can we do to support them? When you think of trade, you always have both the local currency challenges and the foreign currency challenges in the markets in which we're operating. And so to be able to address that and talk about how as a bank we can solve both of those problems for them. I think in terms of the highlight though, what really stood out for me is that you realize when you bring these entrepreneurs together, whether they've come from Tanzania or from Zambia or from Cape Town or from Johannesburg, they all have similar challenges. They're all grappling with the same stuff. What's most amazing about the segment is that it's a very energized segment. It's a segment that is looking for solutions, looking to get on top of problems. And so the conference was very energized. We facilitated, the way we designed the conference was to have not just plenary sessions where we could engage with key speakers, as you mentioned previously. We also have a lot of networking time. So you could let people who were trying to solve problems, once they've heard speakers in plenary, then engage with one another, debate it. The second thing that was really significant, actually, was you'd have people say to us, we've been trying to solve a problem in Ghana for a long time. Can you connect me with somebody from Ghana? Where you could say, yes, here's our team, and here are other business leaders from Ghana, just to use that as an example. And so these are many of the things that came out of the work that we did over the 2 days at the end of last week.
What were some of the key opportunities that emerged for Africa's businesses? And I guess with all of the dialogue, there must have been lots of interesting opportunities that emerged as businesses discussed this going into the future.
So I tell you, one of the most engaged sessions was we had a session where speakers were talking about how they manage family-owned businesses. And so when you think of family-owned businesses, you have all the issues of trying to build capital, trying to understand your market, etc. But actually, probably the most engaged part of the session was when people started to talk about succession planning. How do you manage your family versus the family business? How do you allocate capital between the two of them? How ultimately, often these entrepreneurs are the mainstay and the drive of their business while they're alive and young and energized. But they then have to think about how do they hand the business over to the next generation? What do they do for that, etc. How much capital do you keep onshore versus do you have offshore? All of these questions. Those are the types of sessions that were incredibly engaged and had a lot of participation, not just from the panelists, but from questions from the audience as well.
When it comes to renewable energy, and I touched on energy earlier, and energy obviously a very important factor here because without energy, you don't have that kind of growth. So when it comes to renewable energy, Bill, what are some of the opportunities for our continent, and how can businesses and the financial sector get involved to really make a difference?
So, it's so interesting. So in South Africa, often the debate is around coal and baseload. And of course, baseload is absolutely essential for a sophisticated economy like South Africa. But that's true across the rest of the continent as well. It's very, very important to build baseload. But what's interesting is that baseload comes from different sources in different parts of the economy. So if you're in a country like Uganda, a lot of the baseload is renewable already because primarily it's delivered from hydro. The challenge in Uganda is distribution. And so how to tackle that distribution challenges for Uganda. In West Africa, again, the solutions for energy are different in the sense that over the last few years, West Africa has largely been bringing the gas onshore, the gas that used to be flared offshore. So that's been brought onshore. So now the focus is more distributed energy than necessarily renewable energy. And so when you go to factories in Lagos, what you see is big stacks of generators burning gas, which is a transition fuel. That's a big step forward from burning coal or diesel. But that's what they're building the baseload power in West Africa on. So it's I guess the key point is it's very varied. But to come back to the point you made, is energy is critical for growth. Energy is growth. And so in engaging in each of these economies and with these entrepreneurs, it's so important to be talking about energy solutions for them as they grow their business.
Intra-Africa trade is really important in tremendous growth. And, we've got many partners globally. There's China, there's the USA. But how can intra-Africa trade benefit the continent? And what does this mean for businesses across Africa?
Yeah, so you're absolutely right. Traditionally, or over the last X number of years, there's been more trade from Africa to the big trade blocs, China, the US, Europe, the UK, etc. That's been the primary source of trade, both of exports, so the extractive industries, agricultural industries, etc., and imports. A lot of the focus, certainly ourselves as a bank, we're very focused on supporting the African Continental Free Trade area and agreement. And what that's really about is reducing, working together with the authorities to reduce these barriers, the domestic barriers to trade. Some of those are infrastructural, so some of those are making sure that the ports work, the roads work, the customs work, etc. And actually, as I work across the continent, there's a huge amount of progress being made in each one of these areas. So the last trip actually I did was to Dar es Salaam, and they literally just brought on 2 technical partners to the port in Dar es Salaam that you're starting to see an impact of. So that the governments are working on, etc. But actually, the more complicated thing is the sort of trade tariffs and barriers that are in place. And so collectively, the African Union has come together and appointed a leader in the continent to really focus on unlocking all of that. And that is we are making progress on that. Importantly, as a bank, just to give you a stat, for example, as a bank, we have just got to the point where we are facilitating transactions for customers on the continent that exceed any other trade bloc outside of the continent at this stage, which is a very significant move. So it's a very, very significant step.
How does Standard Bank plan to leverage its extensive network? And if I'm not mistaken, you've got a presence in 20 African countries to drive that intra-African trade that we've spoken about.
Yeah, often it comes down to basics. Do you know people to trade with? Do you have a relationship with them? And so the point you make about us having presence in 20 African countries is absolutely right. Now that's been a 30-year program of building that predates many of us as the current leadership of Standard Bank. But it is something that we've got in place now and that we can make available to our customers. Importantly, this is like real meat and potatoes banking. We've got physical presence on the ground in each one of these countries. We can do local currency. So if you're in Zambia, we can trade for you in kwacha. But at the same time, we do have very significant international dollar, euro, and actually we're working very hard on building renminbi capability as well. So this is very practical stuff that we think is important to be able to put in place to facilitate trade within the continent.
Bill, I imagine with all of the discussions that were held at the conference, there must have been some interesting takeouts for you as well. And what would you say were the key obstacles? What are the biggest obstacles that small and medium-sized businesses face in Africa?
Yeah, absolutely. So the most significant obstacle to trade in Africa is access to foreign currency liquidity. That's consistent. Other than South Africa, that broadly, because of its very big export capability, broadly there's a shortage of hard currency liquidity across Africa. And so that for us, we would support things such as supporting renminbi trade over time, because that brings in another currency into the mix. In addition, there's a lot of work being done by the African Continental Free Trade Agreement in order to actually facilitate inter-country trade. So if I cut through it, there's a lot of technical jargon, but where they'd like to get to is that if you want to trade between Lagos and Johannesburg, for example, you could trade directly in local currency to do that, and ultimately get to the point where the reserve banks would hold that currency and have that capacity. That would avoid the need to go into hard currency and then out again. So today, if you want to trade into Zambia, you have to trade into hard currency and then into kwacha, and then back from kwacha into hard currency into rands. So these are the initiatives that we would like to support over time.
Now, I know that Standard Bank is and has invested huge amounts of money in technology. When you look at the bank 20 years ago and you look at how business is done today, the digitization and technology has played a pivotal role in banking. Talk to us about that role that technology has played in Africa, because surely that must be an enabler across Africa for Standard Bank.
Yeah, in trade, but actually across the board as a whole. So what we're very focused on as a bank is using technology to support the relationship managers that will support the entrepreneur. Ultimately, entrepreneurs are time poor. We know that because they're starting something new. And so we need to provide them with the facility and the capacity to transact digitally, to access foreign currency digitally, to do all these things, to make international payments digitally. But also when they have a need to engage with somebody within the bank to solve a problem, etc., that they can easily access that relationship manager. Ultimately, our focus is to support and engage and encourage and really get the relationship managers almost to the point where they're sort of like an Uber relationship manager.
Yeah.
They've got all the technology behind them to see exactly what the customer sees, to support the customer in what they do. Not necessarily to replace them, because ultimately business is done between people at the end of the day. And so it's very important. We think it's very important to keep those relationship managers, keep them engaged with the customer and make them available to the customer when the customer has a non-technical problem to solve, just a basic business problem to solve.
Final question. This conference sounds absolutely amazing and it was a huge success. Are there plans for another conference in 2025, Bill?
Yeah, so what we do, Aki, as a Standard Bank, we always listen to our customers. So what we'll do now is we'll go back to them. We got incredibly good feedback at the time, but we'll go back to them and say, did we have it right? Should we adjust it? What should we play up? What should we play down? Should we have it annually? Should we have it every 2 years? But we'll listen to our customers and get that feedback and build off the back of that.
Bill Blackie, CEO for Business and Commercial Banking for Standard Bank Group. Thank you so much for joining us for this episode of What's Next. We appreciate your time.
Thank you, Aki, and thank you to your viewers. It's good to be talking to you.